Good evening, everyone. My name is Paul Young. I'm just going to walk you through the manufacturing sales trends for Canada for February 2017. Basically, what my goal is to kind of give you an overlay of what's happening in the economy, so to kind of get you decisions when you're looking at investments, job opportunities, and just basically the overall growth in terms of the GDP growth. So I'll focus on key areas like PMI index, which is the Purchase Price Management Index. I'll focus on basically softwood lumber, NAFTA, hydro rates, commodities, as well as the sales trends themselves. So one of the things I always instruct people when you're looking at trends and looking at information is you need to go beyond the headlines. If you look at these two headlines here, they're telling you specific things to grab your attention, but they're not providing you the details in terms of things. So part of the things when you look at the trends, you have to look at not at 1 month, but you have to look at a pattern and see what are sustainable behaviors within those patterns. The PMI index shows you right now that anything above 50 shows you that we've had expansion. So we've been pretty well on an expansion since about late 2015. It's dipped down, it's expanding again. Now, a lot of cases what's not being told in here is the fact that oil production and pricing has rebounded by at least 40% in terms of the pricing since 2016, the beginning of March 2016 to April 2017. The other area that comes into play is softwood lumber or trade deals. Softwood lumber is a big issue. We do not have a deal in place right now. BC is one of the bigger areas where softwood lumber comes out of play. It's an area that needs to be of concern because it'll impact trade, which impacts GDP for those provinces, which impacts indirectly as well as directly social programs. NAFTA. Now, basically what's happening now is Trump got elected now to basically do a relook at NAFTA. Now what they are doing is they might make some significant changes because let's face it, we become more digital. E-commerce is a big thing, so they're looking at the whole overall how we flow this information technologies and goods and services. Okay, then we're also looking at regulations in terms of environmental, labor, and regulation. Doesn't impact Canada and the US as much, but Mexico is an area where the labor standards and environmental standards need to be increased or improved. There will be always anything deal. There'll be contentious issues if you bring in punitive import taxes or as well as look at any sort of buy US directions. These are things that can impact, that will have an implication on how this deal moves forward in terms of modernizing NAFTA. We can't talk about manufacturing if we don't talk about hydro rates. Ontario is really putting the sticks kind of to hydro costs in Ontario for businesses to the point where some businesses are revisiting where they're going to make their investments. This gives you an idea on the commodity prices. What I want you to look at the average rate for the last 15 years on the commodity prices, and then look at the year-to-date where we're running in February in 2017. In most cases, if you look at the way commodity prices are going, is very few of the commodity prices are even up to the point where they were averaging the last through 2015. So there's still significant challenges with the overall supply as well as pricing and demand. You can't look at manufacturing sales unless you look at key segments. So if you look over a month comparison, and basically we've seen $2.4 billion in change between February 2016 and February 2017. But if you look at that, 70% of that change is directly attributed to oil production. So a lot of the change in production right now is still being driven by oil production, where we were the same period year. Month over month, we're seeing marginal declines in areas because what's happening is we had some strong years in transportation equipment. That's starting to pull back now. This kind of gives you an idea in terms of the percentage of changes month over month, as well as a percentage change in terms of the actual key areas from non-durable goods to durable goods. This gives you a quick quote and talks a little bit about price effect and volume as well. We can't look at sales manufactured sales unless we look at by province. And what you're seeing here is a quick look at where we are in provinces, right? Well, Quebec has done significantly improvements there. Now that's a little bit of a misnomer there, because the bulk of the growth in February's manufacturing sales were driven by aerospace. And if you look at Alberta as well, when you look at Alberta in terms of where it was, we basically recovered a lot of their oil production as well. I brought in steel because steel is an area that's kind of showing like a lot of the fabrication area is seeing improvements in there. Steel's up year over year, so that's the reason why I wanted to show you that. Now this is just a brief presentation to kind of give you the idea of the manufacturing sector in Canada, and basically kind of let you know that you're going to hear a lot of rhetoric in terms of what's going on with this sector. Again, we saw a significant GDP growth for the first month, but there's going to be some pullback. We're not going to hit an annual growth of 3.4% this year. It's likely going to be closer to between 1.8% to 2.2%. That's realistic to the expectations of what you see, because some of the key indicators there that are driving business, like business investment, government policies like carbon tax, hydro rates, eventually they're going to flow themselves through the system, as well as the impact on Donald Trump's policy. So to say that we're going to go on a trajectory of a 3.5% GDP growth is likely not going to happen. Thank you.